Unium is the subscription management hub for B2B SaaS companies. Whether you're looking to expand to new markets, experimenting with pricing models, or simply want a streamlined quote-to-cash process, Unium got your back. On top of that, Unium Insights provides the SaaS metrics you need for reporting to the board and for future company evaluation. It gives you the key figures needed to drive your business forward and take strategic decisions. Unium. We help SaaS companies manage their B2B customer subscriptions.
Welcome to Startuprad.io, your podcast and YouTube blog covering the German startup scene with news, interviews, and live events.
Hello and welcome everybody. This is Joe from Startuprad.io, your startup podcast and YouTube blog from the German-speaking area, Germany, Austria, and Switzerland. Today I have another winner of the German Startup Awards here. Hey, Filip, how you doing?
I'm great. Great to be here.
Totally our pleasure. You won in the German Startup Awards category investor, and not surprisingly, you are an investor. You are the founding partner of Cherry Ventures. Yes, like the fruit, Cherry Ventures, based in Berlin. And everybody who's a frequent follower of our news, I do assume they'll already know that name.
Yeah, right. I mean, we started investing a couple of years ago. I think the different thing about us is, so we started more on the other side of the table. So everyone in the team has been building companies before we became an investor. That's also, and I guess we're going to talk about this a little bit, how we do things maybe a bit different than a lot of other funds.
Yes, of course. We will talk about it a lot here. First and foremost, thank you very much for the sponsor of this interview, Startupraven.com, the easiest and most efficient ways to meet investors and cooperation partners. Learn more in the show notes down here. This podcast is also in cooperation with the German Startup Association and the German Startup Awards. As we did last year, we are bringing you several winners of the hashtag GSA22. And here is another awesome example. Filip, I've been looking a little bit at your profile. This time we will not link your LinkedIn profile because everybody is tempted to send you pictures that way. We'll get at the very end of the interview towards how you can pitch it. For everybody who's just interested in that, there will be right now here in YouTube, there will be a note where you can find all the details. But talking about you, I've seen you attended the Philips Academy close to Boston. And my first thought was, are you now addicted to Krispy Kreme donuts?
Yeah, good question. A little bit. I like them. I mean, it was a boarding school. So, and it was, age, 14, 15. You weren't really allowed to go to Boston on your own, but we did eventually a couple of times. And of course, had a lot of those donuts. Yeah.
Awesome. It's very fortunate they're not around here. Otherwise, you would totally see it. You also studied in Buenos Aires. And the first thing that came to mind is, you dance flamenco?
Flamenco, no. But I have to admit, I tried like a tango, Buenos Aires tango lesson, but didn't really succeed. So I left it at the one lesson. But it was part of an exchange. Tango Argentino, sí.
Yeah. Muy bien. I've also seen you work quite a lot, as we said. So, for example, at DaimlerChrysler in Malaysia, I found very interesting. Boston Consulting Group and also Sony BMG in New York City. I assume they've been all internships?
Yeah, it was, and so was Buenos Aires, by the way. It was part of this program that I did at a school in Germany called WHU that I went to. And as part of that education, we had a number of internships that we did abroad. And one of them was Malaysia, which was exciting, work for a German car company in Asia where, it was still, very, very prestigious thing to drive a Mercedes. And we introduced a couple of new models then. And then, the typical, I would say, consulting gig that sort of every kind of business student at some point has to do. And then, Sony BMG was interesting because I got to go to New York, which was probably one of the most exciting times in my life, and stayed there for a lot longer than the original internship. I did a lot of music as a kid, so I sang in a band. I played the violin. I have a classical training as a musician for voice also. So I always thought I would end up in the music industry, and I didn't eventually, but at least I got to see it for a couple months. So that was fun, and of course, New York was fantastic.
Awesome. I honestly also love to sing, but it's so off key. Even the cat takes refuge when I start singing. So not going to bother here.
Let's not do it. Let's not do it here on the podcast. I don't think
Great.
People would
you
appreciate
founded
it.
your first company back in 2008. What did drive you after doing Malaysia, consulting, music business? Why did you start your own company, and what was it all about?
Yeah, it was a time where I think the startup ecosystem in Germany and in Europe generally was in a very, very different place. There were very few startups. The first couple of successes, I don't know if you remember StudiVZ and these kind of companies, they were around, but it was a very small scene. And I met, when I was still at school writing my master's thesis, I met a couple of business angels that had this idea for a collectibles marketplace. And, I got into it. A friend of mine that I was living together, we both we liked the idea. We were starting to do some work on it. And at some point we were like, okay, why not? Let's do it. Let's move to Berlin. And then we started building it. Long story short, company's not around anymore. So it wasn't a success. We scaled it to maybe 25, 30 people. We raised a little bit of money from some investors from the sort of eBay environment. So, as 90% of all startups failed, so did this one. But it was my entry ticket sort of into the world of entrepreneurship.
It was your first learning. What kind of collectibles did you have there on the platform?
It was art, it was antiques, but it was also kind of the typical collectibles categories like stamps, coins. We had Michael Schumacher's first car. We had the tennis racket that Steffi Graf won the Wimbledon tournament. So we had some really fun items as well, like highlight auctions, we called them. And we tried to get into live auction. And I guess it was a little bit early for that anyways. I mean, you see now Sotheby's and Christie's and all these companies have live auction online. But back when we started, it was always, also connection problems. So the connection was just not fast enough to really stream a good video quality. But mixed things.
Yeah, I also noticed it's getting easier and easier for you and me to actually connect here and have really good real-time conversation and good video and audio quality, which wasn't totally the case when I started out podcasting back in 2012. So I really appreciate the quality that improved here. And in 2009, you founded Zalando Lounge. It was later part of the Hamburg-based fashion e-commerce giant Zalando. And how did you get in there from collectibles to fashion?
Yeah, so I mean, we were sort of figuring out that we were not really going anywhere with Tamundo, my first startup, and I was looking around. I had the option to go back to BCG, to Boston Consulting, and then I spoke to two of my close friends from school, Robert and David, who had just started Zalando. Zalando, by the way, it's not in Hamburg; it's a Berlin-based company, and I joined them, and they were like, "Hey, why don't you join?" And I started looking into everything that was sort of new business, so new categories. I led our internationalization when Zalando grew from Germany to 17 markets in Europe, and then we had this idea about building a shopping club. So Zalando Lounge is basically an off-price shopping club, similar to in the US you have Guild Group or Bon Privé in France is quite a large business as well. And then we actually set this up. I started to build a team, started to build a product, and we launched it eventually then in 2009.
And you've been a C-level executive there for 4 years. And then, for whatever reason, your CV at Zalando stops and you found Cherry Ventures. Can you take us above this cliff? How did you make the decision and why did you become a VC?
Yeah, so I was there for 6 years, a little bit more than 6 years. In 2014, Zalando IPO'd. And when a company IPOs, you kind of have to really make up your mind. Do you want to stay? Do you want to continue? Because when you're public, then it's also a little bit more difficult to leave. And so I had this, I would say, thought process on what I wanted to do next. I was turning 30, and that was my 30th birthday, which ended up being my birthday party and my Zalando goodbye party in the same in one. Because I felt I wanted to work in a smaller environment again. I had really enjoyed this investment activity that we did. So it's also how we started into then building Cherry. Eventually, we started very small. We started as business angels. We did small investments with our own money, maybe 20,000 here, 30,000 here, 50,000. So very, very different to how angels invest today, where some of them would personally invest a few 100,000 into one company. But back then it was still small. We did small investments and grew a very interesting portfolio over time. And then when I knew I was going to leave Zalando, I thought about maybe I start another company. Maybe there's a new startup idea that I had. And the more I thought about it, the more often I came back to the idea of professionalizing this investment side. And that was then Christian, my partner at Cherry, and we were for a long time sitting next to each other at Zalando, and we were investing together as angels. And then, as sort of, I would say, this idea became a bit more developed, we then said, okay, let's do it. Let's just raise our own fund. We have to obviously take in external money. We can't all do it with our own because we didn't have enough. So it was then also the decision to bring in investors. And that was kind of the idea of Cherry and how Cherry started.
Mm-hmm. Of course. You raised your first fund, $10 million US. And where did you get your external investors? You just had some friends and say, hey guys, you got a few millions around?
So the first fund that we had was very small, as you said, and it was mostly, it was even smaller than 10 million. It was really just personal capital plus a few close friends. So we just asked a bunch of people, hey, do you wanna invest with us? And from there, we built a portfolio of maybe around 30 startups. Some were actually really, really successful. Like we had some great wins in that fund. We had Auto1 that IPO'd later. We had Flixbus. We had Quandu. We had Amorelie. So a really, really cool group of companies. Some, of course, not so successful, but I think in general the fund was growing very nicely. And then the first institutional fund was 150 million euro, which was big at the time for a first-time fund, for an early-stage fund. Our current fund now is around 300 million. So we grew a bit over time. We didn't grow too much because we also didn't want to. I can talk about that later. Mm-hmm. But we started raising that from friends as well. And the interesting thing is that a lot of the people that we've invested in that had successful exits now invested in us. So the founder of Amorelie, Lea, she became an LP in the fund. And the Flixbus guys that we invested in, Jochen, Andre, Daniel, they are now invested in Cherry. So that's really cool to see how then, it's a community, you support each other, and they sort of maybe thought that, if these guys do this, then they may have an idea what they're doing because they're already invested in us. So they supported us. And that was the first chapter basically of fundraising. The first couple of million came like that from friends and friends of friends and extended networks and a lot of individuals. It was a very, very tough fundraise. It took us a couple of months because it was a lot of money. Mm-hmm. And then over time, our investor base has become much more institutional. So our investors now, the big investors are pension funds. There are large foundations. There are US universities. So we still have some individuals, but the majority now is, I would say, more sophisticated financial investors, institutional investors.
Mhm. I've seen that you have. Sorry, I've seen that you have at least 4 funds with, we just talked about it, more than $1 billion asset under management. And from what I've seen, more than 50 investments you took as lead, and you're still an early stage investor. So that's a lot of money to deploy there. I don't know, it looks a little bit like the speed and size of the early stage investment has shot up quite a lot. Personally, I think they've been growing by 100% at least, and they always get earlier the money. At first, you just had to show a product, had to show some revenues, but now the investors are getting in early and earlier because they get better valuations. Is this also your personal experience that you need to invest more and earlier?
Yeah, I think the activities have definitely shifted a bit towards more early stage companies. We have always been early investors from the beginning. So Cherry, our fund, likes to be the first institutional capital into a business. So we often have the case that there's some angels that are already invested, sometimes not, sometimes we're the first ones. But typically we invest as a first fund, and that's going to stay our strategy. If you talk about the amount, yes, it's a lot of money, but 60% of the fund we reserve to then follow on in our own portfolio companies. So if we invest in a seed round in the first institutional round, that means we allocate around 60% of the capital to then invest in the Series A and in the Series B in some of the later rounds. And that's kind of how also then the fund size makes sense, or is necessary actually, to be a partner, not just from one stage, but actually be a partner for many stages for the company and provide them with the necessary funds. Mm-hmm. And you asked about how early do investors go? And I think it is right. Of course, the earlier the business, the lower the valuation, but of course also the riskier the investment. So I really believe that an investor should be focused, stage focused, and we are very, very good at doing these seed deals, doing these early deals, spotting the best founders early. Mm-hmm. But we wouldn't become a growth investor. Like we wouldn't now compete with the Tiger Globals or the big hedge funds also in this world. That's not our business. That's not the business we want to be in.
Mm-hmm. Mm-hmm. Understood. As you said, you've been quite good in picking early good startups. Flixbus, Jochen, we have him in our interview. We already interviewed the founders of Qualifyze and Sanity Group. You've invested early in the unicorns Infarm and SellerX, and you did some exits we also covered in our news, like Amorelie, Kitchen Stories, Flaschenpost, and Auto1. I think you guys have a pretty good idea how to track, how to get in early on interesting startups. What's the secret about that? You have to look at a lot of pitch decks and learn over time, or do you have an algorithm, or then you just write an AI and it spits out the good pitch decks?
That would be wonderful, wouldn't it? We can all go to the beach and the AI does the investment for us. No, that's unfortunately not the case. It is still very much a people's business. In the end, the idea is important, but more important than the idea is a team. So it's very much about understanding who are the brightest minds in the industry and what topics are they thinking about. And then, of course, we have a strong view of markets that we like, industries that we like. And if we can match that, if we have a unique personality, a bright mind that is working in an industry that we like, then we start to be very interesting, and then we try to get involved. And we also use technology, not an AI that makes the decision we need to make, but we use a lot of technology to filter. So we have a few thousand pitch decks that we look at every year. And we also do a lot of outbound. So of course you can apply to Cherry and say like, hey, here's my deck. Do you want to invest? But we oftentimes actually turn it around and we look for signals in the market. We screen platforms like Twitter or GitHub or also LinkedIn. So for example, if you're a VP product at Zalando and you change your job title on LinkedIn to something like stealth mode or startup or working on something new, we get a ping through our software, and then we can reach out and start a conversation. And sometimes it actually leads to an investment. So we are, of course, working with a big team. We are around 30 people that are sort of in across Europe searching for the best opportunities. But then we can enable that a bit through the technology that we've built on top.
You said there are a few industries you like. Can we talk about that before we get to the important question, why you're called Cherry Ventures?
Both very important. Yeah, so we typically, we are a VC. So we look at every single investment has to have the potential to return the entire fund, which means we have to exclude businesses that may be good businesses, but they just can't to the size that we require as a VC. So we tend to focus on large industries, often where there's little digitization, and we believe that these industries will be disrupted over the next couple of years. So just to give you a couple of examples, we've been very active in fintech, an area which, the banks, you had the big banks, and the entire fintech value chain has been disaggregated, and there have been more and more startups focusing on smaller parts of the value chain, like FX or like consumer banking or lending. And there have been some very successful outcome in this space. My partner Christian focuses a lot on food, alternative protein, for example. He's in a few delivery companies that he's invested in. I also have a strong focus on health. Health tech, obviously a massive market opportunity in terms of the size of the market.
After a little technical interruption, since you lost your internet back there in London, Filip is back, and we still need to clarify why you are Cherry Ventures.
Yeah, true. Now we talked about great streaming and internet, and now we lose each other in the middle of London. No, but Cherry, the name, there's a lot of stories to it. The easiest one is, of course, cherry picking, the cherry on top that we liked. So we were actually thinking about names, and we wanted to do something that's a bit different from the others. So we didn't want to name it after a tree, like Oak Tree Ventures or Sequoia, like some of the American funds. We wanted something a little bit more, seed, and also with a bit of a twinkle in the eye. And we like cherry, and we picked it, and we don't really remember why, but we like it, and we're going to keep it.
Okay, understood. When everybody's watching this, for the very simple reason they want to get you on board as investor, as you said, early stage, you want to be the first institutional money, so likely pre-seed, most of the time I would assume seed funding?
Yeah, seed, pre-seed. Sometimes we can do Series A, but usually we stick to seed. Yeah.
Understood. Where are you focusing? Is there like a certain geography where you invest?
Yes, as we support a lot when we invest. So we work closely with our teams and our founders, and that's also why we focus almost exclusively on Europe. We have some exceptions to that rule, but they are usually European teams that have moved to the US or moved elsewhere. And within Europe, we have a strong focus on the DACH region, Germany, of course, being the most important. We're also our headquarters. We have a bigger office in London, where I am today here, even though we don't have good internet. And then we have an office in Stockholm.
Okay, I see. What is your normal ticket size if you invest?
It starts very small. We can do a few 100,000. The average ticket is larger. It's around 2 to 3 million. And we can also do investments that are larger than that. So I think the largest initial check that we've written is probably around 6-7 million.
Mm-hmm. You are investing in startups. We're currently at a very trying time when we're recording this beginning of September. We are not sure about the heating, about the energy in Europe throughout the winter.
Yeah.
Hopefully it will be not too harsh, but nobody knows for sure. The question is, what do you expect for your startups, your portfolio in the next, let's say, 2 years? Currently, I would assume a recession with a high inflation combined.
Yeah, I think that is pretty clear. We are actually already in a recession. And that, of course, will impact the startup industry as a whole. You see it already. If you look at the numbers, the investment volumes this year are significantly below last year. Last year, we were on all-time highs across the board. There was almost that everyone became a startup investor. There were also so many new funds and angels. And we're seeing now that as money gets more expensive with increasing inflation, and then, of course, consumers not being able to spend as much because they need to save, because energy costs going up, that, of course, that has an impact on our portfolio. It has an impact on the startups overall. And if you look at the public market, so the startups that are already sort of not startups anymore, but they went public, you also see a huge correction throughout the course of this year, right? So the multiples, the valuations have come down significantly. The way we think about it is like we always want to back amazing teams, and we will continue to do that also in a time like this, so in a financial crisis, in a recession. But as a founder, you need to, of course, focus more on profitability. Growth is important, but it's not everything. So it's important that as a founder, you think about, how can I reach profitability with the company? How can I actually build a good business and not just something that has big growth numbers, but it's never going to make money? So in that sense, there's definitely a little bit of a mind shift that has been going on in our industry for the past couple of months. Yeah.
Mm-hmm. You guys are also crypto investors. Crypto has been beat